Welcome. We are on the floor of the New York Stock Exchange. It's Tuesday morning, and we are here with our guest. That is Mark Otto, Managing Director per Streicher and Company. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, another quiet day probably today here at the New York Stock Exchange and elsewhere, on the New York market. Not much going on. We had some economic data this morning. The first reaction was positive, and now we are back, again on the minus sign.
Yes, the last night the Asian markets rallied. News out of Japan, they're considering doing a tax cut for corporations. So that rallied the topics and the Hang Seng Index as well. This morning, right now, the European markets are still holding on to modest gains. It seems as though the German zoo numbers came out better than anticipated. Retail sales here in the United States also showed they actually showed expansion for the fourth month in a row. So.
Even though less than expected.
Yeah, it's a little less than expected. I think coming in this number, though, people are wondering what happened, what's going to impact with the sequestration, higher taxes, and the fact that people are going, have kids going back to school, so if they're going to spend or not. So it seems as though the increase in housing prices and the rise in stocks sort of countered that.
Yeah, of course, the fact that we saw again, though, for 4 consecutive months and not really a big sequestration effect, it could be used also politically in the next, following months.
Absolutely, yeah. I guess anything's ammunition, right? However, I think the underlying theme is, we are recovering, perhaps slower than a lot of people would like to see. However, the economic data has been, for the most part, positive.
And we know this also from all the comments that we had from the Federal Reserve, a lot of them. And the debate about the future of QE3, of course, is influencing the market. It's been influencing the market, of course, for the last few days. Not much going on. It's the second half of August, no many volumes, and a lot of volatility could be expected, if any comment eventually will come later today from one of the Fed speakers. So do you think that this situation, this scenario will, be with us for the rest of the month?
More than likely, we've been like range bound in the S&P 500, so 1670 to 1700 is really the range. Right now we're at 1684, 1678 down from here, and then 1672 are support, and 1686, and then 1692 are resistance going up, and of course 1700. However, it seems to be we are in a range. There's no real catalyst. There is a lot of macro data coming out this week, so we may see some knee-jerk reactions. However, what I think most traders are going to see is if we actually break out on the top end or the bottom end. The fact that a Fed speaker is actually speaking today, that's really shaken the markets recently every time they get on the air. So, I'm going to be watching after the European close what happens after, we get the news from what's coming out of that speech.
Now let's talk about Japan again. Of course, the news that came today, as you were saying, really moved the market, not just in Asia, but also in Europe. Not much effect here, of course, that we were saying. So any big news coming from Asia that you're going to follow in the next few days?
Well, that was a big one. Anything attached to Abenomics and what's going on, Japan's stimulus package is 3 times the U.S.'s size if you're going by percentages. Macroeconomic data out of China has been positive recently, and we're seeing that play out in the markets, particularly in commodities. There's been a big rebound in some of the miners. For example, out of China, there's a China-based U.S.-listed stock here, YZC, Yangzhou Coal Mine. The past 5 days, that stock's up 25%. So it's pretty impressive. Another thing going on in China is they're mentioning easing the property curb. So the real estate stocks are actually coming into play now as well. So E-House is actually EJ. Is up 25% as well in the last 5 days. So we are seeing that. We're seeing signs of life. What really happened with the Chinese stocks, the China-based U.S. stocks over the past month, is it's really been the e-commerce stocks that have come to the forefront in the solars. So we are seeing it spread out into other sectors, which I think is extremely positive. A lot of people have been debating what's going on with China. I've been saying it for a while that China is bottoming out, and we are seeing signs of life.
And the real estate situation doesn't worry you? I mean, you think that the government will just make sure that there will be no bubble?
Yeah, it seems as though their game plan is, instead of worrying about the property curbs, doing what they would like it to do, because really they haven't had much impact. A lot of people, in China, they're sort of limited as to where they can put their money. So what they're trying to do is have more controls on other sectors of other industries. So it'll almost be a counterweight. Hopefully they're successful. One thing about China is they can be very aggressive in a short duration of time. So that's something that other major economies don't have.
Now let's come back here. Give me some number for the S&P 500. What are the levels that you're looking at?
We're sitting on one right now. So 1686 is the level. So up from here, 1692 and then 1700. So down from here, it's 1678 and then 1672. So right now we are range bound. Again, I'm going to be watching after the European close what comes out of the Fed speech. We're really looking for something to be a catalyst to break out of the top or the bottom of the 1670 to 1700 range.
Yeah, we'll see if that happens. Thank you very much, Mark, for being with us.
Thank you.
And thank you so much for watching.